Hello. In this video, I am going to discuss circular flow of income and expenditure model. Using this model, I will also discuss the basic concepts of leakages and injections. And in the end, I will give you a simple example and show you how to calculate these leakages and injections. Circular flow model or diagram represents the flow of goods and services and money between producers and consumers through various markets. So basically, it's a circular flow of goods and services and money between producers and consumers. This model consists of four sectors: business, household, government, and foreign sectors. This model covers three markets: product market, factor market, and by factor, I mean factors of production, such as labor and capital, and financial market. Let me start this model by introducing first the two sectors out of four. That is households and businesses. So from now on, I will call it household sector and business sector. So since this is a model, so we are assuming that households pay for goods and services. So basically, household sector is buying goods and services from the business sector, and business sector is actually buying factors of production from the household sector, or in other words, business sector is paying for factors of production. So the earnings of four factors of productions are wage, interest, rent, and profit. That is, wage is the earning of workers, interest is the earning of capital, rent is the earning of natural resources, and profit is the earning of entrepreneur or enterprise. So notice these arrows. These are also very important. So if you see here, these arrows, let's say, for example, take this from household sector. So household sector is actually receiving goods and services from the business sector. So you can see that we are going in this direction. That is, goods and services are flowing from business sector to the household sector. Of course, this household sector is not receiving these goods and services from business sector for free. The household sector is also paying for these goods and services, which we call consumption spending or consumption expenditures. So household sector is paying these dollars, money, to the business sector against these goods and services. The same thing is happening in the factors of production market. So if you see, household sector is selling factors of production. That is, we are moving in this direction. So the factors of production are flowing from household sector to business sector. That is labor, capital, natural resources or land, and enterprise. Of course, business sector is not getting these factors of production for free. Business sector is paying for these factors of production. That is wages, interest, rent, and profit. So business sector is paying money, that is dollars, against these factors of production services. So you can see that in the upper portion, that is in this portion, goods and services are flowing from business sector to household sector, whereas money is flowing from household sector to business sector. Where does this money come from? So household, actually this sector earns this money by selling its factors of production to the business sector. Let me uh, show you another diagram by adding one additional information. So now this is exactly the same diagram, except that I now call it, that is consumption spending and goods and services. Consumer sector will buy these goods and services in the product market. Similarly, business sector is selling its goods and services through product market. So this is called product market. So product market is a place, maybe physical or virtual, where buyers and sellers interact and buy goods and services. That is product. That's why we call it product market. Similarly, the bottom market is factor market. Why? Because we are selling and buying factors of production. So notice in this diagram, I have two sectors, households and businesses, and I have two markets, product market and factor market. Let me add additional information to this diagram. So I have added one additional information, rather two. Notice that when households receive income against their factors of production or against their services, there is the money that household sector receives. Household sector is not going to spend all of them on buying goods and services through product market. Household sector might also save some portion of its earning, and that save money is what we call savings. So the household sector saves or saving. There are two options. Household sector or these consumers might, save money under the pillow, or they put in the bank. So I'm assuming if household sector uh, saves money and put that money in the, let's say, financial intermediaries. By financial intermediaries, I mean, let's assume commercial banks. So suppose if these consumers are putting their savings in the commercial banks. On the other hand, investors can borrow from these commercial bank this money. Why? Because commercial banks are not simply safety deposit boxes, right? So commercial banks just does not, they don't hold your money and keep that money idle in their vaults. Commercial banks make money by lending your money to the investors or borrowers against interest rates. So these banks will make money, will earn money by giving loans to these investors. And these investors then borrow this loan and buy capital goods and services. So suppose if someone wants to open a pizza shop and they need some ovens, then these investors might borrow from the commercial banks and then buy those ovens that will help them sell or make more pizzas. Let me add another possibility. So another possibility, if you look at this diagram, another possibility for the household sector is households might also spend a portion of their income on imported goods and services, not necessarily all domestically produced goods and services. So household sector might spend money buying foreign goods. This is what we call imports. So this payments, that is what we call payments for imports. So this money is going abroad. If you are buying from South Korea, if you're buying from China, if you're buying from other foreign countries, then this is your import. So this is also the expenditures in terms of dollars. So notice a portion of the household income is going to consumption spending. Some portion is saved by these consumers, and some portion of the money will actually spend on foreign goods and services. Now, the household sector will buy these goods and services that are being produced outside Canada. They can only buy through foreign sector. So they will go through foreign sector. They will buy these goods and services by paying dollars, Canadian dollars. On the other hand, business sector, if this sector is unable to sell all its goods and services to the domestic consumers, then this sector might also sell goods and services produced domestically to the foreign country or to the foreign sector. So when business sector sells goods and services to the foreign sector, business sector will receive money in terms of dollars. This is what we call dollar payment for exports. Now, this is a very simplified circular flow model. So I'm not, including foreign exchange market, because when you export something, you have to go to the foreign exchange market, because suppose if you are importing from United States, and then you have to pay the seller in United States in US dollars, but you have Canadian dollars. So first you go to the foreign exchange market, not physically, of course, virtually, and then you convert your currency from Canadian dollars to US dollars, and then make payments if you're buying, that is, if you're importing. But if you are exporting something, the US citizens or consumers, they will pay you in US dollars. And then that you have to convert that US dollars into Canadian dollars using official exchange rate, and then receive that Canadian dollars. So this whole process is not shown in this diagram. I'm assuming that this business sector is selling goods and services to the foreign sector and receiving dollars, Canadian dollars, of course, through foreign exchange market. This is what we call payment, dollar payment for exports. Now, if you notice that I have added three sectors, so far in this circular flow diagram, that is household sector, business sector, and foreign sector. Now, or foreign sector, and definitely you are going to buy these goods and services in the foreign market, but I'm not mentioning this. Now there's another sector missing, that is government sector. So let me add government sector in this model, in this diagram. So now I added government sector, and as I added other information as well. Let's do one by one. So first I added government sector, and you can see that government is imposing taxes on both household sector in the form of, let's say, income tax, and to the business sector as well. That is, let's say, indirect business taxes that eventually consumers pay, or property tax, or whatever, payroll taxes, different types of taxes. But we are not interested in the in those taxes. What we are interested in, that government is receiving money from both household sector and business sector in the form of tax revenues. On the other hand, government is also buying goods and services from the business sector. We don't call it consumption expenditures or consumer spending, because government, when government, federal, provincial, is spend money buying goods and services, This is what we call government expenditures. So, for example, if government needs hospital beds for one specific hospital, then government will buy those hospital beds from the business sector. They are producing all those beds, assuming then government will pay money and then receive beds. Similarly, government is also paying TP. By TP, I mean transfer payments. Transfer payments are not taxes, remember, because in taxes, oh, sorry, are not government or not expenditure. Let me put this way. So transfer payments are not expenditure. By expenditures, I mean you are giving money, and against this money, you are getting something. That is the definition of expenditure. So if you pay $1,000 and get a laptop, that is expenditures. Transfer payments are not expenditures in that sense. Transfer payment means that government is giving money against nothing. For example, student scholarships, for example, aid, for example, grant. So these are the government payment to households, and in return, government is not getting anything. So government is not buying anything from you. But capital G, that is government expenditures, are that government is giving money to the business sector and receiving goods and services in return. Now, this is the overall model, this total model. Let me discuss, as I told you at the outset, that I would discuss and explain the concepts of leakages and injections using this circular flow model. So there are two ways to explain these two concepts. So number one, as you can see, so I've already circled these leakages. By leakages, I mean when the money is going out of the system. And what is the system? The system is just these two sectors, business sector and household sector. If money is going either out of household sector or out of business sector, that is leakage. So leakages are that amount of money that is going out of the system. For example, savings are the savings are leakages. Why? Because it is going out of the system. It's going to the commercial banks, not towards business sector. For example, imports. This money is going out of the system, that is to the other country. For example, taxes. These two taxes. These two taxes, this is the money that is going out of both household and business sectors. So these are leakages. That is savings, imports, and taxes. And we always, okay. Then we have injections. By injections, I mean when money is going into the system. And since business sector is selling these goods and services, so if the money is going towards the business sector, that is important. And this is what we call exactly opposite of leakages, that is injections. So notice that these investors are buying goods and services from business sector as well. So this is one type of injection. That is why for investment I wrote injection. So investment is one type of injection. Dollars, payment for exports or exports expenditures. So you are receiving this money. You means the business sector. So that is also injection. Why? Because the money coming into the system. For example, government expenditures, they're also considered as injections. Why? Because now the business sector is receiving money. So the money is going into the system, not outside the system, right? Or out of the system. Transfer payment is also considered as injection because the money is going to household sector. But normally we don't mention transfer payment. Why? Just to simplify this model. So we always adjust this transfer payment with the taxes. So we always take taxes minus transfer payment. Whatever is the amount is basically a leakage, right? So we adjust transfer payment into taxes. So this is the definition of leakages and two definitions of leakages and injections. Okay. Now, let me give you a simple example and then I will explain the concept of leakages and injections once again in a slightly different way. So right now in this diagram, you can see savings, dollar payments for imports and taxes are leakages, investments, payment for exports and government expenditures and transfer payments are injections. Now, if leakages and injections both are equal, that is the meaning of equilibrium. If they are not matched, then we have a problem in the economy. Let me first discuss this problem. So this is the definition of equilibrium, a stable a state of balance. That is no tendency to change. So you can see that if the economy is in equilibrium, then you must have this identity. That is not identity, equality, because they may be different. Identity means they are always equal. So savings, imports, and taxes, these are all leakages. So notice that I did not mention transfer payments because I've already adjusted in taxes. So suppose if taxes are $10, transfer payments are $2. So I just say taxes are $8. That is 10 minus 2. And injections, investment, exports, and government expenditures. Remember, I am not saying that savings equals investment, imports equal exports, taxes equal government expenditures. This is not what I'm saying. I'm saying if you add all these leakages, then this must equal to, at equilibrium, all these injections together, not individually. So this is the meaning of equilibrium. Now, what would happen if leakages are not equal to injections? So these are the two possibilities. Number one, notice in this slide, these are injections, and savings, taxes, and imports, these are leakages. If injections are greater than leakages, the economy expands. We have economic growth. Why? Because we are receiving more income, more money into the system. The money is going out of the system is less than what we are receiving. So if many people within Canada and outside Canada, if they are demanding our goods and services, what would happen? Producers are most likely produce more. How they can produce more? They have to hire more workers, more capital. They need more factors of production. Where does labor come from? From the household sector. So household sector will also earn more income by selling their factors of production. So income of consumers will also, not consumers, basically household sector who are selling those factors of production increases. Producers are going to produce more. How they produce more? By hiring more workers. So employment level will also increase. So the whole economy will, the economic growth will take place. That is the output in the country, the production level will increase, employment level will increase. So that is good for the society. The other possibility is if leakages are greater than injections, then the economy contracts. That is when we have a recession. So in recession, producers are not producing goods and services because no one is buying those goods and services. We have lower injections compared to leakages. When they're not going to produce, they're not going to hire workers from the household sector. Household sector will not be able to earn income. When you are not earning income, you are not going to spend. So there is a chain effect. And there's higher unemployment in the country. People are not getting jobs. This is what we call recession. So the best situation for any economy is the equality of injections and uh, leakages. Now, let me give you one last example, and I will solve that example and just explain again the concept of leakages and injections. So this is the example. I'm reading this example out, and then I'll put all these numbers in the circular flow model that I showed you earlier. Suppose the household sector sells its factor services, I mean all factors of production, to the business sector for $10. So I just take small numbers, right? So that calculation is easy. $10. That is wage, interest, rent, and profit. The household sector spends $4 on buying goods and services from the business sector. This is consumption expenditure or consumption is spending, $4. Saves $2. So this sector is saving $2. Imports $2 worth of foreign goods. Pays taxes of $2 and receives $2 as transfer payments. Investors buy goods and services, of course, capital goods and services. By capital goods, I mean those goods that are used for further production, like ovens. If you are, planning to run a business, if you are, want to open a bakery. So investors buy goods and services from the business sector for $1. Foreigner is spent $3 on domestic goods and services, and the government spends $2 on goods and services. The business sector pays $2 in taxes. Calculate total leakages and injections. So let me put all these numbers in this diagram as you can see on your screen. So notice a number of things. First, it is much easier to calculate total leakages and total injections using the formula that we discussed earlier. So if you want to add, if you want to calculate leakages, you have to add these numbers. So savings $2, imports $2, $4, and then $2, $6, and then $2, $8, and I told you we adjust transfer payment. So $8 and then subtract this $2, $6. So $6 total leakages. And so I'm writing here leakages is $6. And now I see injections. So $1 investment, this is injection, and then $3 injection, and then $2 that is government expenditure injection. So 1 plus 2 plus 3, 6. So injections are $6 again. So they both are equal, and therefore the economy is in equilibrium, right? Now, there's another way to define leakages. By leakages, I mean the money that is not spent on buying goods and services produced by the business sector. That is the definition. That is, now see this, household sector, if you remember in the example, receives initially $10. Household sector receives $10 by selling its factors of production. You can see here, this is $10. So $10 basically covers all these four different types of income. So household receives $10. Household sector only spent $4, if you see here, $4 on buying these goods and services from the from the business sector, that is domestically produced goods and services. Only $4. Where's the $6? $6 is gone. It's not spent on buying goods and services. $6 is a leakage. So you can see $6 is the leakage that we calculated earlier. That is the concept. So if consumers are saving more and buying more from abroad, and what is the third one? Saving, imports, and if there are heavy taxes, then consumers will not be able to spend. So there are more leakages. Now, what are injections? Injections are basically the amount of money that is spent on buying domestically produced goods and services other than household sector. So investors are buying goods and services for $1. Payment for exports, $3. The foreigners are also spending, and government is also spending. So the same $6 is spent again, but not by household sector, by investors, by foreigners, and by government. And you can see if injections is also equal to 6, then this sector is happy. Why? Because they have produced $10. Injections is also equal to 6, then this sector is happy. Why? Because they have produced $10 worth of goods and services and all being sold. No issue. If suppose consumer are spending only $4, so leakage is 6, and investors, foreigners, and government is not buying these goods and services from the business sector, what business sector will do? Business sector will know, that is, these producers know that they can't sell all their goods and services. So next year, they are not going to produce more because they have already huge inventory. So next year, they're not going to employ more workers. So we have unemployment in the country next year. So in order to avoid this problem, government makes sure that business sector can sell their goods and services. So whenever we have recession, government will always increase its expenditure buying goods and services, building, constructing road, bridges, investing in education, building hospital buildings, all this stuff. Why? In order to increase the demand for their products, so that this business sector can sell their production, that is goods and services, so that they can employ or hire more workers. So employment will increase. Okay, government can also give incentive to these investors to invest more by that is central bank of any country. In Canada, it's Bank of Canada, by lowering the policy rate, tax rate. So if Bank of Canada lowers the policy rate, investors have incentive to borrow money from the banks because the cost of borrowing has gone down, and they invest more. Similarly, if you have a lower value of your currency, so if Canadian dollar depreciated, then foreigners have incentive to buy our products. Why? Because it becomes cheaper in terms of foreign currency. So these are different policies that government will use to boost domestic demand for domestic goods and services. So notice that in just 4 sectors and 3 markets using this model, we basically examine the whole economy. That is what we call circular flow of income and expenditure model. Thank you.